Yeah.
Okay, I'm going to put you in the webinar right now. And so then just wait a minute or two before start talking. Okay, great.
We will start our webinar in 1 minute. I think we are on, and so let's start. So my name is Mamuka Tsereteli. I'm a senior fellow at Central Asia-Caucasus Institute and the American Foreign Policy Council. Welcome to our webinar. We'll be discussing economic outlook for Central Asia and the South Caucasus today with our guest speaker, Deputy Director for Department for Central Asia, for Middle East and Central Asia, Dr. Subir Lall. This is in continuation of a decades-long tradition of partnership between IMF and our institute, Central Asia-Caucasus Institute. And Subir became our good friend for quite a while now, and he traditionally presents economic outlook for our region at sometime at in-person meetings. Today we'll have a webinar. Subir is a very experienced executive at International Monetary Fund. He worked in different parts of the world, Latin America, Europe, Southeast Asia, Africa. So he has extensive experience. Obviously, his knowledge and experience are very helpful for countries of Central Asia and South Caucasus to have somebody like him advising governments and central banks and so forth. Actually, we all know that before going into presentation that Subir is going to make in our conversation, just wanted to say a few words. And as we all know, Central Asia is a very dynamic region of the world, rapidly growing economies, one of the fastest growing economies around the world, rich with resources. Several countries have very rich oil and gas resources, but also resources in minerals, uranium, rare earth, and others. It's obvious because of the geographic location of the region and resources, it attracts lots of attention from geopolitical actors as well as economic actors. And we see growing interest from investor community as well towards the region. And just if we just look at the dynamics of just last several actually weeks or months about visits of foreign officials and presidents of different countries and heads of European Union and others, and organizing summits with leaders of the region, you see attention that region is getting. In addition, as mentioned, because of the growing economies and fastly growing economies, purchasing power of population of region is growing, and countries of Central Asia and South Caucasus are becoming attractive markets for producers of consumer goods, other type of products. So there is a kind of two-way movement now, resources and some of the products going out from region, but also region attracts producers from all over the world as well. And because it's a landlocked area, most of it, so obviously access to markets and access to for producers to this market is a subject of obviously separate conversation. So it's just a very important part of the world. That's why it's natural for our institute to be focused on that. Central Asia-Caucasus Institute, we just published, I think, very interesting document called An American Strategy for Greater Central Asia, where we focus some of the pressing issues that United States government, from our opinion, needs to focus on. But today's subject, discussing issues of economic prospects of economic development in the region, I think it's very important for countries of the region, but also all the partners that the region has. So with this long, but from my opinion, important introduction, I would like to move to now presentation. And Subir, maybe you do the little intro, and then we'll move to the presentation.
Yes, certainly. Thank you, Mamuka, for your very kind introduction. It's always a pleasure to join you for these discussions when we update our outlook. And at the fund, we certainly consider our conversations with you and the Central Asia-Caucasus Institute as very important and a regular element of our engagement on economic issues in the region with key stakeholders. And I hope many of them have joined the webinar today. I think, Mamuka, you put it very nicely in terms of the context. It's an excellent context for the region's economic developments and the last 3 years have frankly been remarkable, but also what we'll talk about today, including the prospects. And, one cannot overstate the importance of the region in terms of how dynamic it has been and what the prospects are going forward. And in many ways, a theme that comes out is for the region, the South Caucasus and Central Asia, we are in many ways at a pivotal moment. And there are many opportunities that could be taken advantage of. Looking back very briefly, the region has demonstrated quite impressive resilience in a very volatile global environment. And so this provides an important platform to look ahead and towards embedding reforms that can secure long-term economic transformation. And just, as I mentioned, the last 3 years have been very robust. And the question is, can this be sustained and what would it take to sustain it? And so hopefully our conversation today will provide some guidance on how countries can leverage this stability to undertake forward-looking reforms that drive investment, productivity, and inclusive growth across the region, and which also, of course, promotes broader stability in all these countries. I look forward to our conversation. So please go ahead, Mamuka, and we can take this forward. Maybe perhaps we move on to the presentation now.
It's on now.
Yes, thank you. So maybe I'll start here, which is just a quick sort of backward-looking view. And as you can see that the region, even in 2024, has shown stronger than expected growth. And this was true for both oil exporters and importers, and which informed, in fact, outperformed earlier projections. So this reflects a number of factors. It includes post-pandemic recovery, spillovers from the region, and resilient domestic demand. And we have seen a lot of strong domestic demand from more or less all countries across the region. And so there is broad-based momentum, and this reflects the solid performance they've had. And it also reinforces our confidence, and I think the confidence of others and policymakers in the near-term outlook. But what you will see in the right-hand side chart is that inflation remains elevated in some countries, with headline rate still above target in some key countries such as Kazakhstan and Uzbekistan. And this highlights some persistent price pressures. We can move on to the next slide. Thank you, which is about the outlook. Growth among oil importers is expected to ease as the exceptional tailwinds from the regional conflict as well in Ukraine begin to fade. And domestic demand, which has been buoyed by migration inflows and related income effects, is projected to normalize gradually over the medium term. It's certainly something we've been saying for some time, but the normalization seems to be quite extended over time, and that's boosted growth in recent quarters and recent years. A similar moderation is also anticipated in oil exporting countries as growth slows in line with more subdued growth in hydrocarbon production. And non-oil sectors are now expected to contribute more meaningfully to activity, reflecting both fiscal spending and gradual progress in countries on oil exporters towards economic diversification. Inflation is also projected to decline gradually across the region, but near-term price pressures are expected to remain above target among the oil exporters. But over the medium term, it's expected that inflation will decline across the board. The slightly elevated inflation for the region is largely driven by Kazakhstan, where inflation is projected to remain nearly double the target this year. And this reflects a number of factors, including fiscal expansion, subsidy reforms, and imported inflation from imported goods. In contrast, if you look at among oil and hydrocarbon exporters, inflation in Azerbaijan is closer to target. In general, inflation among oil importers, though elevated, is generally more contained. So now, one of the questions, of course, is what would be the impact of changes in tariffs for the region, and what can we expect from that based on our most recent round of forecasts and updating. So more broadly, I think it's fair to say that while there's a gradual moderation in growth and inflation, there are downside risks, particularly from external spillovers that could disrupt demand and income flows across the region. Direct trade exposure for the region to the United States is limited for most countries, with non-hydrocarbon exports forming only a marginal share of GDP. As such, the direct impact, regardless of the outcome on the tariff picture, is expected to be relatively contained. However, there is a greater vulnerability to indirect effects through weaker demand globally, perhaps, or volatile oil and commodity prices, tighter financial conditions, and uncertainty around trading partners. And I'm sure you've heard this in other discussions as well. Uncertainty is the dominant theme in many ways. And so obviously those things could have an impact for countries in the region, and they could also affect broader export prospects for countries in the CCA and for income from abroad. Several countries in the region, the Kyrgyz Republic, Tajikistan, Uzbekistan, are also highly dependent on remittances. And countries like Georgia and Armenia are more exposed to external conditions through travel and tourism receipts. And so these are countries that are particularly more sensitive to shifts in external demand conditions. So let me now turn to the risks. The balance of risks remains tilted to the downside, with global uncertainties that I just mentioned continuing to weigh potentially on external demand. And another risk is that rising trade tensions and policy fragmentation could limit export prospects and investment flows across the region. Tighter global financial conditions and commodity price volatility pose additional challenges, particularly for economies with limited buffers or heavy reliance on external financing and commodity-linked revenues. So these are risks around the baseline. These are not in the baseline. And regional specific risks could also compound the headwinds from the global outlook. And this could be, for instance, a potential slowdown in Russia, which remains a key trading partner for trade, remittances, and migration, weakening domestic reform momentum, and increasing frequency of climate-related shocks such as droughts and floods. On the upside, there are opportunities for the region. The region could benefit from further trade diversion as global supply chains are reconfigured, and stronger than expected reform implementation could also lift productivity, improve investor sentiment, and support more robust medium-term outlook. So turning now in the next slide to the policies and reforms, the current growth momentum in the region offers a critical opportunity for countries to strengthen their policy frameworks and entrench market-based reforms that can sustain growth over the medium term. And market-based reforms meaning that where the allocation of resources economy-wide is guided more and more by price signals and market signals more generally. And because, as you know, in many countries, for instance, there is a substantial role for state-owned enterprises, for example, or where price signals are distorted through subsidies and so on. If properly utilized, this historic moment, you could think of it as the first one since the collapse of the Soviet Union more than 3 decades ago. This could imply a positive structural break for the countries to reach a higher growth path and also to have greater income convergence with their peers in the emerging markets space. And this would entail greater integration of the countries with each other and with the rest of the world, as well as the reforms that are needed to spur private investment and market reforms. So those are the things that could help make this a positive structural break for the region. And progress in these directions would also help the economies navigate challenges from rising global uncertainties, including shifting trade patterns and financial market volatility. Specifically, priorities that more or less cut across all countries in the region include having sound fiscal position that is critical to cushion shocks and sustain investor confidence, rebuilding or strengthening fiscal buffers and enhancing fiscal policy credibility is essential for that. Reinforcing monetary policy frameworks and improving reserve adequacy also remains an important priority. A more predictable and credible monetary policy stance can help anchor inflation expectations and strengthen the effectiveness of policy transmission. For growth, accelerating structural reforms would unlock new sources of productivity and competitiveness. This is especially urgent given that TFP, total factor productivity growth, which was once a key driver of the region's development, has stalled in recent years, undermining income convergence with global peers. Notwithstanding the robust growth in the last 2 or 3 years, TFP growth still remains quite anemic. And then finally, reforms that promote private sector-led growth, reducing the footprint of the state in the economy, advancing digitalization, diversifying trade partners, attracting FDI. They're essential to reverse this TFP slowdown. And by effectively taking advantage of these opportunities, the region could escape the risk of being trapped in a low productivity, low growth trajectory in favor of one that sustains higher levels of growth and convergence with higher income emerging market peers. And finally, in the last slide, let me quickly outline the fund's role and support for the region. The IMF has remained a committed partner to the region since the early 90s, providing also substantial financial support since the onset of the pandemic. And Georgia, Uzbekistan, and Armenia have been among the largest recipients of recent crisis-related, pandemic-related support, and as well as programs in Armenia and Georgia. And this reflects strong engagement on a number of reforms. In addition to financial support, there is an important other component, which is capacity development, which has been greatly enhanced since the opening of the IMF's Caucasus, Central Asia and Mongolia Technical Assistance Center nearly 5 years ago. And this has been recently scaled up in recent years, particularly for the low-income countries such as the Kyrgyz Republic, Tajikistan, and Uzbekistan, which remain high-priority destinations for technical assistance. As you can see, capacity development spending has been broad-based, covering both country-specific and multi-country delivery formats, and priority areas include public financial management, monetary operations, financial sector supervision, and capacity building more generally. And these are all sort of very much within the IMF's core areas of engagement and its mandate. In this fiscal year, we expect CD delivery to continue to be strong across the region. And as mentioned, major beneficiaries, including Kyrgyz Republic, Tajikistan, Uzbekistan, underscoring the engagement the fund has in strengthening institutional capacity and policy effectiveness, because strong institutions help implement stronger policies. So, Mamuka, let me stop here right now, and then we can perhaps have a more open-ended discussion. But that ends my presentation part. Thank you.
Thank you, Subir. I think you gave us a lot of interesting details and information for us to think about how a region is dealing with its own developmental issues, but also global challenges and risks that are providing very important kind of context for operation of the regional economies. For the audience, you can use a question and answer segment for posting your questions to our speaker and to myself, if I can be in any capacity to answer them. But meanwhile, before we get questions from the audience, I would like to maybe start with my question. And I think you gave us very interesting point about some of the pretty much focus was on fiscal policy, on monetary policy, obviously growth elements. These economies of this region are obviously growing, and the role of foreign direct investments and local investments are important, but also state plays still very significant role. So how would you characterize changing kind of balance between state and state kind of run economies, elements of economy, and the private sector, and where this balance is kind of shifting, if in any direction?
Yeah, so that's a really important question. And of course, I mean, as we all know, countries, they have a common shared history. So the footprint of the state was very large at the beginning, at the time of their independence. But what we have seen since then is there has been a greater differentiation. In some countries, it's much more visible. In other countries, less so. I think the way to think, I mean, so for instance, if you look at Georgia and Armenia, just to pick two examples, where clearly the reducing the footprint of the state has been much farther advanced, and less so in some of the other countries, although they're all making progress. I think the way to think about it is that the role of the state needs to shift and be, in a way, modernized, rather than be a producer of goods or determining allocation or resources. The role of the state in the modern economy, and this applies beyond the region as well, is to facilitate the most efficient allocation of resources across the economy. So this includes, reforms to make sure there's a level playing field for competition, because you don't want, just shifting to the private sector but dominated by monopolies. That's not really helpful for efficiency and growth, because it just shifts ownership but doesn't shift how decisions are made, for example. So that's, I think, quite important. So modernization, it includes reforms on governance, on transparency, all the things that will help also investors make good long-term decisions on how to invest their money, where to invest, make long-term plans. And then the second element of what the role of the state is obviously to provide robust macroeconomic framework, so that there is stability and predictability on the macro outlook and on the financial system, so that these longer term investment decisions can be made by the private sector. There is definitely a role, as always, for the state in some segments where there's a public goods aspect to it. But what happens with the history that we have had in the region is that sometimes the state is involved in things where the private sector can do as good a job, if not better. But it's very difficult to disengage from those sectors. Let me stop here.
Yeah, this legacy of obviously Soviet times and more than 70 years in this process obviously has impact, and there is this fear of transition to fully kind of market-driven economies there, obviously, and that all the issues that may emerge with the potential growth of unemployment, with restructuring the private sector companies and so forth, if in case of privatization. But in general, how you see that this privatization process is gaining momentum, or it's like you think it's more like a slow process at this point?
So I think overall it would be fair to say I don't think that we are seeing a whole big wave of transfer of ownership, say from the state to the private sector. And I think it is important again to emphasize that the reforms need to be cast, not thought of as just business friendly, but the reforms need to be really market friendly. And that's what I meant also by saying that, simply a transfer of ownership by itself will not necessarily lead to much more efficiency gains, but as long as it's a level playing field and then there is free entry and exit. Maybe one other point that was triggered by what you just said, Mamuka, is to say that in terms of the role of the state, clearly, these transitions, I mean, are not easy, and there's a hesitancy because of the impact it might have in, say, different groups. And that's also where the role of the state comes in, because the role of the state is also to make sure that those most affected by these transitions or structural transformations, which are good for overall growth, but to make sure that those who are affected are well taken care of and they don't slip through the cracks. So that's where the state can provide more support, for instance, through retraining programs, even financial support in the transition, making sure that no one gets left behind when the economy transitions to a new steady state.
Okay. We have a couple of questions from the audience. Why don't we start maybe answering those? I think we have a question from Nigar Jafarova. Which countries in the region you think have the highest potential to leverage on? I'm not sure that I understand point, but maybe you do, Subir. So,
I guess in many ways the question would be the way I interpret it is that who can take best advantage of the current conditions. So here's a bit of a surprising, perhaps, takeaway from the recent years, that even if you look at some of the lower income countries in the region, such as the Kyrgyz Republic or Tajikistan, they have grown very strongly, in addition to those who have been considered advanced reformers, such as, for instance, Georgia and Armenia. So that distinction is actually not that relevant at the current moment, because we've done research and we've done this across regions, that the most impact of reforms, the best in terms of the growth payoff, happens in good times. Of course, people, it's a bit of a dilemma, because if you do reforms during good times, such as now, the payoff is much higher. But also that the social acceptability of reforms is much more. Now, that being said, the story is that often reforms are only done during periods of turmoil or crisis even. But luckily, we are not in that. We are in quite the opposite situation. Now, why is that important? Is because that's what just the good times, say in the last 3 years, does not by itself imply that there has been a structural break. It's what we would call a cyclical upturn. So one needs to be careful to say that, okay, that doesn't mean we don't need to do anything because we're growing at 10%. What's the problem? Actually, no, it means this is a good time to do it, to sustain potential growth at 6 to 7%. But I would say all countries are potentially able to benefit from the current moment. They've all done more or less very well.
You mentioned the cyclical point, but also the paradox of this war in Ukraine is that countries benefited, other countries of Russia's periphery benefited from the process. And another question from Nigar is about how you think end of the war will impact on growth of these countries. So have you done any assessment of that and the way you see processes going?
I mean, to have a very specific answer, and we obviously are not experts in geopolitics or anything. It would depend on the contours of what it looks like in the post-war scenario. But I think in general, it's safe to say that the end of the war would actually help sustain momentum anyway, because then a lot of the things that are uncertain in the shorter term become much more clear, and the things I spoke about earlier in terms of making longer term investment decisions, in terms of further reforms, that you could see from moving from a cyclical bounce to more of a structural lift to the economies after the conflict ends. So it would be a good thing, of course. But at the moment, indeed, I mean, the cyclical bounce has been remarkable. But coming back to my earlier theme, I think we really need to think about what will help lift potential growth in the region, and the end of the conflict would obviously be helpful for that as well.
Our next question is from Marcia McGraw-Olive. After thanking you for comprehensive presentation, the question is about trade. And China is a dominant, obviously, trade partner for region. For many countries, it's #1 trade partner. But where do you see process in terms of trade going with China? You think remain in this position, or you see more potential between region and the European Union? And obviously, issue here is comes to connectivity problems and so forth. But I think European Union trade with China also is maybe a factor as a region becomes kind of transit route for this trade. So your assessment of trade potential of the region and the role of China and maybe other factors that relate to that.
Yeah, that's a good question. Actually, it's a very multifaceted question. So obviously, I'll have to be a little succinct in my response to some of these questions. So let's start with the first thing, which is that even within the region, there are significant barriers to trade of countries with each other. So the first step would be, and each of the countries is relatively small open economies, if you like. So a first step would be for the region to trade more with each other. And that itself would help, because that would make it for a bigger economic entity. More trade and removing the barriers would be a great first place to start, so that the region is doing more trade with each other. I mean, as you mentioned, I think these are landlocked countries, but they have very large borders with each other. So that's a good place to start. And for that, yes, you do need connectivity, improved connectivity. And you need also standardization, for instance, so that, when goods move, the rail tracks are the same size and the roads and so on. But those are all, very manageable kind of issues. Keep also in mind that if you take the mindset of, let's think of this region potentially as being a coherent, larger entity because of close integration with each other, then in fact, the geography becomes quite a big asset, because you have large economies. You have Europe on the west, you have China on the east, you have potentially South Asia as well. and then you have Russia in the north. So it's a connector kind of thing that could take advantage. So there is room to grow the pie. I mean, and of course, with China remaining an important partner, but there's room for a lot of other partners as well. And in fact, then geography becomes a big asset for the region. And it's not just about transit trade. I mean, because a lot of, moving up the income chain is about becoming part of the global value chains. And the region has a lot it can offer, even in that it has relatively high levels of education and skills, including, for instance, in the IT sector. Intangible trade is growing as a percentage of total trade. And I think, Mamuka, you and I have discussed this before as well. And for that, you don't need roads or railways because it's all happening. Intangibles happens through the cloud or through the internet. So there is a lot of potential. And I would say that trade integration, both within the region and with the rest of the world, is the region's sort of biggest, anchor to lift growth. And because each country by itself is relatively small, and even the region, if they integrate, that helps. But trading with the globe, with the world, will really be what would take things to a new equilibrium, so to speak.
Yeah, definitely. I think regional collaboration, growing regional collaboration and partnership definitely makes it more attractive for outside actors to look at the region as a trade, as a kind of trade destination, but also as a destination for investments. Actually, one of our anonymous attendee is asking a question about what is the FDI outlook for the region, if you have any assessments of that. I think you mentioned it a little bit in your presentation, but if you have any more specifics to follow up on that.
So I think it's a good question. I mean, FDI in general requires a few certain preconditions, and different countries, and we know are at different stages of that. As I mentioned, the robust macroeconomic frameworks, stability and predictability on macroeconomic settings is important. Having the buffers to counter external shocks is important. Low debt, fiscal buffers, foreign exchange buffers is going to be important. But very importantly is a good business environment. And there, clearly a lot can be done on reforms for government, on transparency, on competition. So the prospects are limitless, but, it's not, something that can be taken for granted. And in fact, that's a key to unlocking the potential of the region. And that's in my opening, as I was mentioning, that this is a pivotal moment. Those are the kinds of reforms that could unlock a huge boost to productivity, capital, including capital from overseas, coming together with the labor and the skills in the countries to lift growth sustainably.
Yeah, I think it's interesting that if you look at geography of foreign direct investment sources, Europe is largest. European Union, as a combined 27 countries, are largest investors in Central Asia. Right. And in some countries, China is obviously. There were several summits, I mentioned it earlier. So EU Central Asia Leaders Summit in Uzbekistan in April, just I think a couple of weeks or 10 days ago, summit of Chinese leader with all the leaders of Central Asian countries, also committing to signing lots of agreements, committing to foreign direct investments. So these are obviously important developments. And we see not all of these projects that are agreements that are signed will be materialized, but even if some percentage of that's materialized, it's significant for the region. And I think it's also essential that your earlier points about, business climate, governance issues, they connect, even for the dear subject to myself, connectivity issues. I mean, customs, regulations, all this. It's unless you have a more kind of rapid improvements in that direction, actually system cannot catch up with the demand, and you really need to be. The region needs to be acting more aggressively in those reforms, so that more traders will look at region with the desire to move cargoes through the region rather than taking elsewhere. And obviously, some of the geopolitical developments are impacting this process as well. There is a question now for, let's say, how recent Israeli-Iran conflict affects the region in terms of whether it's trade or investment or risk factors for. I don't know if you want to answer this question because of it's more geopolitical question, but it's
yeah, I mean, very briefly, I mean, it is indeed a geopolitical question, so it's certainly outside of my area of expertise. But I would say the channels broadly would be through what would be the impact of these conflicts, for instance, on commodity prices and commodity price volatility and disruptions of trade and so on. And so far, we have not seen very much of that, even at a global level, and so hence not on the regional level. If you look at, for instance, global oil prices now, they are much more contained than people would have speculated even a month and a half ago, and even if you compare it to where prices were in January. So the spillovers have been very limited. But I think what is important, what it underscores is that more broadly, external volatility can affect the region because these are all very open economies. They import a lot of things, not just fuel. I mean, some of them import fuel, some of them export fuel. So that affects them too, global oil prices, but also food and other things. So it's important to have the buffers to be able to counter shocks. And that's going to be, I think, a more of a priority always for the medium term, is that the economies foundations are robust. And what I mean by that is, for instance, take fiscal policy. The role of fiscal policy is to stabilize output. So, it should not be pro-cyclical, which means there's often a tendency in boom times to spend more. And then when the downturn happens, then there's no room left to spend. But in fact, to recalibrate fiscal policy frameworks to make sure that they actually tap a little bit on the brakes when the economy is booming, and they have the room to boost output when the slowdown happens, because business cycles happen.
Right.
So frameworks are important. And again, I cannot emphasize enough that right now is a very critical moment in which those reforms could succeed, because, as I said, the good times are great for doing reforms, and this window will not last forever, obviously. But as you saw from our projections, that it'll be a few years before growth and the other macro indicators converge to their medium term. But at the moment, we still have solid momentum. And so it's very important to do those reforms and to build the resilience now, this year, next year, and so on.
Yeah, the same question also implied about there was an emphasis on changes in Russia and whether the impact of Russia factor going forward. I mean, there are some, you probably follow that as well, that the expectation that Russian economy will continue. I mean, it's the status of Russian economy will change, obviously, going forward, and that will have an impact on the trading partners, and region is impacted greatly. You mentioned it in your presentation, but any more specifics you can mention?
As I mentioned earlier, I think it's difficult to speculate on the specific contours of what will happen and then the impact on the region. But I would say that, and that's why we think of it as a baseline and risks around the baseline. I think that's the only really sensible way to capture the uncertainty that is there. And I think it's difficult to get more specific than that, because it'll become very dependent on the assumptions you make. And then let's face it, those would be assumptions. So that's
absolutely,
it's a bit, one has to be, as an economist, quite careful with one's forecasts.
There is a question also, I mean, to complete this geopolitically related questions, but this is more like Turkey is a part of your department as well, I guess.
It is not, actually.
It's not? Okay, sorry.
European department.
Yeah, okay. Because there's a question about how Turkey's sort of role evolves because of presence in Central Asia and obviously South Caucasus is greater. So
we
role
take
that Turkey
a
plays.
multilateral view, so we don't take necessarily a very specific bilateral view on the impact of country X on the region or investment. We try to think of what would it take for these countries to attract, say, investment and trade from anywhere. So what do you have to do at home to be able to be an attractive destination, rather than a question of what would it take for me to get more investment from country X or country Y. So in any case, our perspective is a global one on these issues, and our policy advice is also calibrated along that line.
One more question from Hatuna Huichia. It's about what impact could cuts in U.S. international development programs have on countries of the region, given that some of the programs of USAID and others supported economic growth and agricultural sector and other sectors of developments, and also training and education and other type of programs in some countries more than others, but still.
Yeah, I think that's a very country to country specific impact. It'll vary. And I think it's still evolving, because also countries will need to understand the full impact. So, we don't really have an answer right this moment in terms of what is likely to be the impact across each country. And we are studying it and trying to also see what the responses are, including from other bilaterals, but also what countries' domestic policy responses are. And I think we'll have a better, clearer picture of that, in coming months or later in the year on that issue. But clearly, the impact varies by country depending on the size of the assistance and the sectors.
Maybe it's not a subject for this format of conversation, but do you think any changes will emerge at an IMF structure, meaning that changing attitudes towards international financial management from certain countries?
Well, we focus on our mandate, and the conversation we are having today is exactly around that. So that's all I can say is that, we are committed to all our member countries and to give the best policy advice where we can, and also financial assistance where needed. And I should not forget capacity development. So we continue doing our work.
There is one more question from the audience. I have read the Central Asia faces, and it's quote unquote, extreme unsustainability as the land and biosphere limits are reached. And your views on that. I don't know if you feel comfortable answering that question. It's more like some of the natural developments with nature. There are things that are happening with the water supply, obviously land, glaciers, changing climate, and so forth. All those factors.
Yeah, I mean, it goes a little bit outside of our area of expertise, natural disasters and things. But what we do focus on is the ability of the economies to react to those shocks. You mentioned, Mamuka, for instance, water supply is an issue. We also know from evidence we've seen that some of the impacts in the region in terms of temperature changes or extreme events is more than, say, even the worldwide average, given the particular geography. But as I said, I want to be I don't want to go too far out on a limb on that, given it's not really our core area of expertise. But our policy advice to that is that, if you see a reality and that where the environment, but also the economic environment as a result becomes more volatile, what can you do as a policymaker? And so there I come back to my earlier point, which was about you need to have the better, more resilience, you need to have the buffers, and you need to have the policy flexibility. If you have that, you can handle the shocks. Now, how to deal with those shocks is not something that we at the fund necessarily have a view on, because we are not experts in that. But what we can say is a robust, macroeconomic framework and resilience are things that will help navigate those shocks better. And certainly that is, as in my presentation, a key component of our policy advice for the region.
Yes, and I think in the past we've hosted your colleagues from World Bank who are more focused on these issues, and there are obviously some policy advices coming to governments, but also I think it's very important to have a kind of more focused sort of assessment of potential developments. It's very hard to predict nature, but there are at least some expectations that needs to be kind of that countries need to adjust to. You mentioned earlier that obviously with a modern economy, with artificial intelligence, with the IT sector development, the region is playing growing role in that in that development. There are major American and other companies involved now in IT sector. Educated population of the region actually attracts that attention, and there is no surprise that many private investors are going into this space in these countries, in our region. And also this potential data center development, and there is a, it's not enough yet, but there is improving data connectivity and digital connectivity with the rest of the world. There are additional projects are planned, cables to be built on the Black Sea and on the Caspian. So all these developments will bring even more integration of the region in the digital space, global space. But how you see this process affecting region? In some countries, I mean, this is maybe not directly related to this, but clearly there are now desire by governments also to have in certain areas, at least in governance, to do e-governance and utilize. In some countries are more advanced than others, but this process is happening as well. So overall, where you see this technological sort of transformation process for the region, and if you have any specifics to share.
Yeah, definitely. I mean, this is a transformation in the region and more globally, and it's again going back to history, and you know, the growth model before, especially you know, I think during Soviet times and even in the immediate aftermath, focused a lot on, say, heavy industry and intermediate goods and physical infrastructure. And now what we are seeing because of these technological transformations is that there's a very important part of growth, of employment, of output, which is non-physical. It's not physical infrastructure anymore, it's digital infrastructure. And it's about data, and it's about the intangibles. The way I see it is, it's not something to be afraid of, but it's actually a great opportunity, because it helps also leapfrog in many ways from some of the constraints that were real for a long time. I mean, we talked about the fact that many of these countries are landlocked. Moving on the digital front helps overcome some of those natural barriers, for example. You need both. It's not an either-or question. You need to move on both fronts. So it is an opportunity, and it's something that needs to be embraced. But for that, a few preconditions need to be in place. One is, of course, that the workforce is one that needs to be able to take advantage of these opportunities, and so training, IT, those kinds of things, engineering backgrounds, quantitative skills, those become more important. And so one has to think of education systems that promote that kind of skill building, rather than factory workers and so on. In the future, more of the balance will be in that world. The other related thing is, most of this will be private sector driven. If it is to succeed, it cannot be done by the government, because what you need is entrepreneurship. You need companies to be able to start up, to try different things. So there has to be a business environment that promotes an entrepreneurial culture to take advantage of this. You also need access to finance, and this is not debt and the old classical banking system type finance, but access to venture capital, access to risk capital. That requires reforms in the financial sector, because you want to make sure your financial sector is robust to these new forms of finance and it doesn't become a source of risk to the economy. So it's an opportunity, but it requires reforms along a number of fronts to make sure that these economies can allow people, entrepreneurs, young people, everybody to take advantage of them. But if they do succeed in that, it would be a game changer for all the economies, because clearly that's where the future is. And so it's, again, as I see it, I'm an optimist. I see it as an opportunity, and which has to be managed. You have to manage the risk, but I don't see it as a threat.
I think it's a very good kind of point to maybe we are almost out of our time, and maybe on this optimistic note, maybe finish our conversation. I just comment that you're absolutely right. It's a private sector driven. We see major companies investing. They discovered this region. They are investing now in training and infrastructure development, where governments can be helpful, definitely, to help infrastructure development, whether it's connectivity with data lines, digital connectivity. In general, infrastructure development for training and other type of involvement. But I see, I don't know data for all the countries, but if smaller country relatively with not much history, maybe in a with this, I mean, if you look at some of the exports of the IT sector exports in some of the countries, you see it's very impressive and growth in that. And for if small countries like Georgia, Armenia could achieve this type of growth, obviously for larger countries like Uzbekistan, Kazakhstan, and others, this potential is there. So, Subir, many thanks for your time and this partnership with our institute, Central Asia-Caucasus Institute at American Foreign Policy Council. And we hope this will continue. We'll come back when your next outlook for the region is out. And for the audience, we'll let you know when our next webinar or in-person meeting takes place. And stay tuned. And thanks to all for participating and listening. And I think this conversation was recorded, so it will be posted on our digital media outlets as well. Thank you, Subir. Thank you.
Thank you, Mamuka, and thanks for everybody who dialed in. It's always a great pleasure, and I look forward to when we speak again, when we have updated our forecast sometime in the fall.
Thank you.
Thank you. Bye.